Bitcoin was coiling like a spring, and now it's finally breaking free, and the breakout could be explosive. Ethereum flashing a rare reversal signal from deep within its accumulation zone. The last time we saw this, it was in Bitcoin, and Bitcoin was at 8,000 before it ran to 64. Today, that setup belongs to Ethereum. Strap in. This is where the smart money makes moves. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you're ready to dive into today's market analysis, make sure you hit that like. Make sure you subscribe if you haven't already. And make sure you follow us on X, where we talk about Bitcoin and crypto all day, every day, 24 hours a day. We are sick on this channel. Anyway, let's start off with the king of Bitcoin. Let's get over to an 8-hour chart. Okay, what we got going on over here on the 8-hour chart, this is one of the most bullish continuation patterns out there. We have an ascending triangle. The marketplace is finally starting to break free from this, from away, gravitating away up to our original target level that we have around that 98 to 100,000 level. Now we're going to be getting into that. I'm going to giving you guys, really, you got to stick with me on this one. I'm going to be giving you an insane sick lesson for day trading. I was thinking about this last night. I said, I got to introduce the guys and gals to this because nobody really talks about this type of stuff. And this is the type of stuff that, we like to bring the masses. Anyway, if we go over to the weekly chart, let's just go over to the weekly right here. We see that Bitcoin is finally breaking out of what kind of pattern do we have right here? What do we got? We got a falling wedge. Now, notice what's happened the last time we were in falling wedges. Once we broke up, massive run, come back into a falling wedge. Again, a breakout, massive run. And now we were in one again, and it was dreadful. It was all the world was ending at the 74,000 level. Oh, man, remember that? Remember when we were down over here, that 74,000? The whole world was coming to an end. Thank goodness we're starting to break away from that and become free. So right now, we have to just also constantly keep mentioning this, Bitcoin is trailing behind global liquidity expansion. Now, look, we've been saying it, said it ad nauseum. If you haven't seen our other videos, and right now probably most of you guys and gals are doing some eye rolls, like, not again, Tom, not again with this global liquidity. But it's really, really important. Okay, Bitcoin lags global liquidity. It's just massive amounts of money out there. It's a lagger. It takes probably sometimes up to maximum 2 months before all this global liquidity comes into risk assets like Bitcoin and Ethereum and starts a massive run. So we're looking at the end of May, maybe possibly beginning of June, before all this money hits this marketplace. But we are well on our way to a little bit of a rocket ship right now. So really, right now, we're expecting Bitcoin to catch up, and once it catches up, we're expecting to really to outperform. All right. So now we have to act like I'm gonna actually take you over to the weekly again. Sorry, I'm bouncing around a little bit, but I think it's really, really important that we show on the weekly. I'm gonna flash this. I'm gonna flash it. All right. The 50-day moving average is acting as our main support right here. We're well above the 200, which is great, which means upward movement. So, we're breaking free of the EMA ribbons on the weekly, which is a positive thing. They're a lagging indicator, so price always leads. And, we're breaking free. That means that the people that are short are going to have to catch up. Okay, they're going to have to catch up. So, zooming out, let's look at. We're going to look at the bull market indicators here from CoinGlass. All right. We are still deep in a bull market phase. 0 out of 30 boom market peak indicators have been hit. That means the party is just getting started. All right, now I get to take my little bit of a victory lap over here. I want to go over to the CME Market Gap. I said that we should be able to get into the CME market gap, kind of fill it. It would be great if we did, because that would actually add some strength. Now, I wanted you to take note of one thing, okay? With the CME market gap itself, it was a partial fill. It was a partial fill. Like, we came down into it, but we didn't fully fill it, okay? Now, what does that mean? It means things are extremely bullish. All right, because it couldn't even get filled. That means buyers were waiting in that gap to get their hands on some coin. That is extremely bullish. So, traders weren't waiting. They were aggressively buying on every dip. The smart money is positioning for a breakout. Are you, is the question. Are you? We've been saying it all along. Are you? Now, let's switch over again. Let's go back to the 4-hour charts. And this is where I want to give you that lesson, all right? I want to switch over to, you know what? I want to go to the 8-hour chart, because there'll be more information on the 8-hour chart. It will be easier for me to work with. Here we go, 8-hour chart. I want to switch over to bars. Okay. Now, I know you guys don't do bars. You do all the candlesticks and stuff like that. But there's an important point here. Quick lesson for you. Why I like bar charts, one, because I'm old school and I have a hard enough time with the English language. I don't really want to learn the Japanese language. But anyway, I think that the bar charts offer a clearer read on momentum. Okay, so here's a quick lesson. The high bar's close in any formation is the often signals. It's one of the most important pieces of information that you have, the close on the bar, because it often signals a continuation or rejection. When price exceeds a previous bar's high close, okay, and closes strong, that's your signal. So in other words, let me get into this. Let me try to make it easier for you. I don't want to confuse you, okay? Like, if we were looking at this structure right here, all right, where we were stuck for quite a while. This is the high bar. This is the close of the high bar right there, okay? Now, notice how price constantly gravitated up to this, kind of slightly went above it, got rejected. Came back down, came up above the close, got rejected. Came up, back up. Now, finally, we breaking out, and also, so it's really important that we close above this high bar's close. That is a bullish signal. Now, okay? So, why am I saying this? Because for short-term traders, what short-term traders will do, let's say, for instance, they're getting long and they expect a breakout above the top and a close above the top. Many times what happens is the marketplace comes up, goes to that close, the high bar's close, and gets rejected from there. So most traders, it's kind of like a fake out for them. They're waiting for the bar. Oh, wow, I went up through it. Oh, I'm attacking this top. I'm going to get up through that top. No, it fails and comes back down. They end up either getting out at break even, or they actually lose a bit of money on the trade. So really, where this idea comes from Fibonacci. Now, once price breaks a 0.382 or a 618 level, most traders expect the move to target the high of the day for a rally, or the low of the day for declines. But that's not what I found. What I found, the true retracement level is the close of the high bar or the close of the low bar. It isn't where most people look. It's often a hidden level, acting as real support or resistance. And that's where really the smart money steps in. So knowing this can change your game a little bit. So I know I went on a little bit longer than I wanted to, but what I want to do here is I want to actually take you back in time, and I want you so we could see the next level of close that we got to get over, which happens to be this little bar's close. It's not the high bar, but it's the high bar of this little area right here. So we have to take the market in little sips at a time. This is the next level that we have to close above, which is very damn close, to actually take us up to the next level of resistance. But it's also that close on that bar, 98. So once we close above this little guy right here, at the 96,700 or so right here, 96, say 700, then we got the next piece of wood to chop at 98.27. Okay, so anyway, all right, enough with that. But anyway, we're on our way. It's looking really strong. So let's talk Ethereum. All right, now here we go. Ethereum. All right, Ethereum itself. I want to flash this. This is insane. We talked about this, the 50-day. All right, so Ethereum is sitting at the bottom of its accumulation zone. RSI right now is a little bit overdone. Okay, but here's the thing with RSI: when markets are changing direction, when they're going from bearish or consolidation mode and they go up, RSI could stay overbought for a very long time. So in other words, as the marketplace is changing direction and breaking out, the really RSI becomes one that you got to look at, but you got to look at with one eye closed, kind of like giving it a little bit of a hesitation there, because it's it stays overbought for a long time in when the market begins to trend or is trending. So that's one thing that you have to know about RSI. Next thing, we talked about this, all right? And I got that for you right here. You see that yellow 50, flashing with the 200 blue on top? Okay, so the idea right now, if we flip the 50-day, then the target's up to the 200 day, all right, which is right around that 2400, which was one of our targets. All right, so we got accumulation, we had a compression, and now we're getting explosion. Now I want to show you this. I opened with this, all right, and I think it's really important. In 2020, Bitcoin consolidated at 8,000. Most people ignored it. Then it ran to 64,000. Today, Ethereum is showing the exact same structure: accumulation, compression, explosion is loading. History is on our side, crew. History is on our side. So before we wrap up, I can't, go on without telling you about our crypto trading community. It's completely free to join. All you have to do is click this link right here in the description. It takes you over to the page where you could sign up and just get ready, where we're dropping insane alpha and education every day. We want you part of our crew. We want you definitely part of our crew. Now, also, don't forget, if you want to follow our trades with a solid broker, give us a click over here. This is like low fees, fast execution, and perfect for our strategy. So join, crew, level up your trading, and let's stack those profits together. That's all I got going for you today, crew. I'm sorry, a little bit long-winded, but I thought that lesson would be important for you. Remember, always do your own research. These are our opinions. And also, trade with your head, not over it. And remember, as a short-term trader, watch those closes and enjoy the party, but dance near the door. Cheers.